why is the Treasury Secretary again talking about gold so publicly?
The world is talking about gold. In fact, we're late to the conversation. The bigger issue for me is not if all the gold's there. I think it is. The question is how much of it is pledged to somewhere else. Gold has finally hit the point where it's ready to blow. I think somewhere between 7,000 and 9,000 is probably where gold ends up in this run. When you see a 25% drop back in gold's price with no sign of a fiscally responsible politician on the horizon, that tells me that gold is cheap.
If China did announce that it has more gold than the US, what do you think happens to the dollar, to the gold market?
This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori, and you are watching The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. And U.S. Treasury Secretary Scott Bessent has put America's gold back in the spotlight. He says the nation's gold reserves at Fort Knox are fully accounted for, and that the U.S. still holds the world's largest official gold stockpile. During a recent interview with Jesse Waters on Fox News, Bessent said that the nation's gold is present and accounted for. He highlighted that the U.S. holds the world's largest official gold reserves, valued those holdings at more than $1 trillion at current market prices, and reflected on the history of gold and silver-backed currency before the U.S. moved to a fiat monetary system. Let's watch.
These are the displays of our currency over the years. Some of it, like we used to have silver certificates. We used to be backed by silver, sometimes gold. And then in the 70s, we just went to what was called fiat currency, where you didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is at Fort Knox, waiting for them to be claimed if so needed.
Have you visited Fort Knox?
I haven't. People on my staff has. We're going to the Treasurer's office. The Treasurer has been to Fort Knox. I am happy to say all gold is present and accounted for. The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
And we're getting more gold from Venezuela, I hear.
We're getting a lot from Venezuela. We're getting gold. These oil sales are going great. It's going back to the Venezuelan people.
Now, those comments raise some fascinating questions. Why is a sitting Treasury Secretary again talking about gold so publicly? And does it tell us anything about how Washington sees gold's role in the monetary system? And what, if anything, should investors read into all of this? Well, joining me now to break it all down and to discuss his outlook for gold is Rich Checkan, President and COO of Asset Strategies International. Rich has over 30 years' experience as a full-service tangible asset dealer. Rich, good to have you with us.
Thanks for having me, Michelle. It's always good to be here.
All right, Rich, we have more gold comments from the sitting Treasury Secretary Bessent. Now, when we zoom out here, it seems like this Treasury Secretary and administration at large have been talking about gold with unusual frequency, shall we say. President Trump has repeatedly raised the idea of physically inspecting or auditing Fort Knox. He says he wants to confirm that the gold is actually there. And this was after Elon Musk publicly floated the idea of visiting Fort Knox with a live stream. Again, in May of this year, in an interview, the president again said he wanted to go and knock on the door of Fort Knox. Several lawmakers have supported greater transparency around America's reserves. Bills have been introduced to audit the gold. And early on in his second term, the president posted on Truth Social the golden rule of negotiating and success. He who has the gold makes the rules. Thank you. So it seems to me like there has been a lot of talk about gold. Bessent has called himself a gold bug. At one time, he said that they would look at monetizing the asset side of the balance sheet. He then walked it back, saying, no, he didn't mean the gold. And Bessent, in interviews, has called gold a historical store of value. He's pushed back against suggestions that the gold that the U.S. holds is missing. And now again, reassuring us that the gold is there and emphasizing the market value of America's existing stockpile. So, Rich, what does all of this signal to you?
Well, Michelle, there is a lot to unpack in that little, 20-second, 1 minute soundbite. Um, the and your comments are very present, if you will. It's not just the U.S. talking about gold. The world is talking about gold. In fact, we're late to the conversation. The world's central banks have been buying gold like it's going out of style for over 4 years now. And it is gaining notoriety in the press. That happens when it becomes your number one tier one asset as a central bank reserve asset, right? So it surpassed the euro, it surpassed the dollar. Banks hold more, or central banks hold more gold as a reserve asset than the two major currencies in the world. So again, I think we're a little late to this conversation. I'm glad we're having it, but it suggests that there's a lack of faith in other alternatives, like the dollar, for instance.
Well, I mean, do you think that Washington itself, though, is beginning to view gold as a strategic asset, particularly in light of the world buying gold, as you just mentioned, central banks purchasing gold at record levels and growing geopolitical fragmentation? Do you think that Washington is maybe having some conversations about how gold should be viewed?
I don't think so. Believe it or not. I think their conversation about gold is more about instilling confidence in the dollar because we have the biggest pile of gold in the world, right? That's what Bessent said. So I think that's what they're trying to do is they're trying to reassure everybody that we do have that biggest pile. It is for real, and it stands behind a currency that, let's face it, the world is losing faith in right now.
But why does it matter? Because we haven't been backed by gold since Nixon took the US off the gold standard in 1971. So why, if that's the reasoning, it doesn't actually matter how much gold the US has because it hasn't been a gold backed system for the longest time.
Well, that's true, but we all know that gold is the world's only real money. I think if you ask any individual if they had the choice of holding a paper dollar or some form of gold, I think they take the gold every day of the week and twice on Sundays. So I do think it matters in giving a bit of confidence to the dollar because even though it's not backed, we have that big pile. We are still the biggest game in town. I think that's what they're trying to get accomplished here.
So, in light of the fact that central banks around the world are buying gold at record levels, the US is still trying to emphasize officially we still have the most gold on record. We'll get to whether that's true or not with regards to China. But before that, there have been questions about whether the US does, in fact, have that gold. Now, Bessent said in that clip that America's gold is present and accounted for. Now, the last comprehensive physical audit of Fort Knox is generally understood to have taken place back in 1953. There have been partial inspections and vault seal verifications conducted periodically since then, but nothing resembling a modern independent audit for every bar. Not to mention rehypothecation, right? Now,
Yep.
there was a limited congressional inspection in 1974. That covered only about 21% of the gold bars. Again, since then, Treasury officials have conducted periodic checks of vault seals and internal records, but there has not been a complete, independent, bar by bar inspection in more than 70 years or so. That September 30th Treasury report in 2024, that garnered some attention. That report stated that all 147.3 million ounces of gold held at Fort Knox were accounted for, but there's supposed to be more. And it was essentially an internal accounting confirmation based on paper. So again, not a physical, inspected, weighed, tested, and matched against the official records. Rich, is this level of verification reassuring to you? As someone in the precious metals business, what would a credible modern audit of Fort Knox actually need to include?
Well, I got to tell you, I have done audits for our holdings at various depositories personally. It is no fun. For we have a pittance, a very fraction of what the U.S. holds if we have that full big pile of gold. And I got to tell you, it takes hours to go through and look at every bar and serial number and verify that it is there. And that's the only way to do it. I can't imagine what it would be like to go through and inventory the gold that backs up 8,133 metric tons. I just can't imagine. And it's not, well, pop in, we'll do the audit, and we'll be out by the weekend. I got to think, to count every bar, it's going to take weeks, if not months.
But beyond counting the bars, I mean, you have to actually test that it's gold, I would assume, on this level of national verification, right? I mean, wouldn't there be
I
some
don't know.
testing? And wouldn't you need to then also confirm that none of the gold has been rehypothecated, reallocated to others? Again, what would this process need to include for everybody to say, you know what, we're comfortable the gold really is there?
Yeah. So my understanding is that there's limited access, and it's accounted for every time the door is opened, if it's open at all, since 70 years ago when they did the full audit, right? I don't think you need to test. If you test, basically you have to destroy some of the gold. There's no other way to do it. But to physically test it with acid, typically, I guess you could put it under electromagnetic, spectrometer, but they're not going to haul that in to the vault. So, and you're not going to take the bars out. My guess is if it's in there, it's fine. Nobody's tampered with it. That's fine. But you do need to count it and make sure it's all there. The bigger issue for me is not if all the gold's there. I've never seen it. So I'm like Scott Bessent. But I can't guarantee, and I don't think he can either, that it is all there. But reasonably, practically, I think it is. The question is how much of it is pledged to somewhere else. And that's a whole nother aspect of this that I don't know. You don't have to take the gold out of the vault to pledge it to someone else.
Well, explain to our viewers what that means, pledge to someone else. How would that work? And
So
wouldn't
this
there
is-
be records of that?
There should be, and that's what I don't know if there are or not. That rehypothecation, basically, you have gold, it is in your vault, and you pledge it to someone else. This is the best way I can explain is the jewelry industry, right? So they need, you'll see gold sales spike right around this, the early fall as jewelers start making jewelry for the holiday season, whether it be Diwali or, Christmas or Hanukkah or what have you, right? Or Chinese Lunar New Year. So they're going to start making stuff in the early fall. They need gold up front to make all this different jewelry that they haven't sold yet, that they're going to put on display later and hope to sell. So basically they borrow it, right? It's somebody else's. They're going to pay a fee to rent it or lease it. But in the end, they have to give it back. And usually the way they do that is they give it back by either sending gold or sending dollars back to the owner once they've sold all that jewelry that they've made. So they kind of borrow it for a short period of time. That's often what happens. That's what rehypothecation is all about. The question is, how much of our gold, that 8,133 metric tons, is pledged to someone else to use temporarily or what have you? I have no idea. There ought to be records on that, and I think
Well,
Treasury
it
would
wouldn't
have a handle on it.
be used. The national gold, the concern I don't think is that it would be used to make jewelry.
It was
Because
just an
they would,
example because it's easy
but
to understand why they would do
but
it.
I would imagine that it could be used to cover some debt or some payment or things like that.
At the geopolitical scale, that's exactly how it would be used. Jewelry is just an easy example, but yes, loans that would be repaid back over time by a country that needed something. Like, for instance, although they have their own resources, Venezuela right now, they have a serious need for some money. That would be a loan that would be pledged against that gold, to eventually be
Right.
repaid.
And we will get to Venezuela's gold because there was an interesting comment in that interaction about Venezuela. But before we do that, again, it is very curious to me that gold has become part of the mainstream conversation to such an extent that there is now legislation in both chambers of Congress aimed at forcing a full audit of America's gold reserves. You've got the Gold Reserve Transparency Act of 2025, introduced in two versions, one in the House and one in the Senate. The House bill, introduced by Congressman Thomas Massey, calls for a complete inventory, physical assay, and independent third-party audit of all U.S. gold reserves, including the gold stored at Fort Knox. And it would require a public accounting of gold transactions, including sales, swaps, and leases going back 50 years.
There you go.
Now, the Senate's version introduced by Senator Mike Lee. That's the companion bill, and it similarly calls for a comprehensive physical inspection and testing of the gold's purity, while also determining whether any of the reserves have been lent out, pledged as collateral, or otherwise encumbered. Now, Rich, at this stage, both remain stalled in committee. They've not received a vote. But what does it signal to you, the fact that lawmakers are demanding or seemingly demanding independent testing? Does that suggest that they don't have faith in what the Treasury's current verification process is either?
President Reagan said, trust with verification. I think it's been 70 years since we had a full audit. It's high time we had another one. Again, it's no fun. But I think it just comes out of the fact that gold is in the limelight now. I mean, Michelle, we've talked before, right? Just what's going on right now with gold surpassing euro and the dollar in terms of reserve assets, that's significant. With the central bank buying of gold over the past 4 years and into this year, that's massive. You see the price of gold hit new all-time highs. It's retracted from those highs, but there's no question in my mind we're going to hit them again in not too long in the future. And then on top of that, anybody that's paying attention knows that gold actually, I never like to look at it as an investment. For me, it's wealth insurance always. It's supposed to sit there, collect dust, and protect your portfolio, and that's what it does really well. But it's outperformed every major U.S. indices for the past 26 years. So far since 2000, gold is up 2 to 3 times the percentage that either the Dow, the S&P, or the NASDAQ are. Now, you can pick out individual companies that have outperformed gold, but most investors don't hold individual equities alone. They have a mix. They have a diversified portfolio. They have the index, which has vastly underperformed gold for 26 years.
Well, but let's bring it back to Congress here. Rich, what are the chances you think that one of these bills actually gets passed?
These bills have been going through committee and getting stalled for decades. I'd be surprised if it went through, and nobody wants to go down there and count it. I promise you. If they've ever done an audit,
so you do not believe that we will actually ever get a full audit?
We may get it, but not through this round. I don't think there's enough push behind it. You said.
Do you think the gold is there? Do you personally think the gold?
I personally think it's there. Like I said, what I don't know is how far out it's hypothecated. So how many people are pledged that value that have to repay it? But I'm pretty damn sure it's there. If the door was locked, it's locked.
Well, there have been theories that, in fact, the U.S. has more gold than on record. And we've had analysts on the show bring up things like Saddam Hussein's gold, which went missing. Gaddafi's gold has not been accounted for. And there's some speculation that, in fact, the U.S. may have more gold through, shall we say, military adventurism than officially on record. What do you think about that?
I think that's the way most countries in the past got their gold. To the victor go the spoils, right? And that's nothing new in our world, although we've kind of moved away from that for many decades. It's possible, but my gut feeling is no. That is something that doesn't happen without a few people noticing. And I can't believe that that's still a secret if it's in fact true.
What, that there is more gold?
Well, yeah. Where is it? Where did they put it? There were people involved in moving that metal, if it happened, from Libya to here, from wherever to here. Where is it? Who was involved? And not all of them are going to keep quiet. I'm sorry. Not in this world.
Well, I mean, maybe that's where these conspiracy theories have come to my attention from, because they haven't kept quiet, and somehow it's trickled, into the zeitgeist here that there could be more gold than we're led to believe. But either way, officially, the U.S. approximately owns 261.5 million ounces of gold. It does give it the largest official national gold stockpile in the world, officially. Here's the interesting thing that caught my attention in that clip. Again, so many nuggets, pun intended, in what Bessent said there. He said, he referenced America's gold at today's market value, which would be more than $1 trillion, rather than its statutory book value. Now, on the books, the price of gold is at $42.22 an ounce. That was a price established in the early 1970s as the US was leaving the Bretton Woods monetary system. The accounting has never been updated. So, Bessent raising this up and giving gold's current market value, is that perhaps a sign that the Treasury is looking at revaluing gold to at least market value? Because we have had some speculation that the Treasury could mark the gold higher, but do you think that this is a sign that the Treasury could officially revalue gold to its market value?
They may. It tells me one thing. I listened to the clip several times to make sure I didn't hear it incorrectly, but he needs a new calculator. 261.5 million ounces at $4,014 an ounce. I get 10.5 trillion. I don't get a little over $1 trillion. Maybe I need a new calculator, but I always thought that was the figure. And at current value, 10.5 trillion, which is still just a drop in the bucket of our current debt, 40 trillion, and that's not even considering unfunded liabilities.
You get 10.5 trillion? I think we go 1.5 trillion.
You really? Okay, maybe I need a new calculator. Maybe I was doing this too fast. But yeah, I got 10497,133. I might be off a decimal place.
That's a big error.
Big decimal place.
That's a big decimal place. But it is very interesting that this conversation has come up. But what would it actually accomplish, right?
Nothing.
What would it accomplish if we revalue the gold? If we have 39 trillion in debt, what does that actually accomplish from an accounting perspective?
Michelle, for me, it does nothing because it's not tied to the dollar. It hasn't been tied to the dollar since 1971 when Richard Nixon closed that convertibility window. So there's no value in that unless somehow we move back to a gold standard. Now, clearly we can't go for one for one, but there could be some sort of fractional backing of a dollar in circulation for the amount of gold backing it up. That could be a possibility. My gut feeling, and gold is a topic all around the world, and like I said, with central banks, I think there's more to this central bank buying. I think it's partly the weaponization of the dollar, which is driving central banks to do this. I think it is partly lack of faith in the dollar, and more importantly, lack of faith in our politicians to be fiscally responsible with the Treasury or with the dollars that our neighbors, our friends around the world are borrowing, right? So they don't see that as good value. I think the world is looking for some sort of return to a gold-backed standard. And I think that's why they're all hoarding gold.
I mean, and that is certainly, a topic that we cover extensively on the show, that gold is being repositioned as that neutral reserve asset in response to excessive weaponization of the dollar, which has led to de-dollarization in response to fiscal irresponsibility. And that gold is emerging as that neutral reserve asset. And perhaps, the US is understanding this and also trying to position the narrative that even if that does happen, we do have the most gold.
Yeah. I think that's part of it. I still think it's a big confidence issue. We have the biggest pile of gold, therefore our currency is sound. I think that's a message they're trying to say without saying.
Although, there has been some contemplation whether China, in fact, has the most gold on record. I believe it has around on record 2,300 metric tons, but many analysts believe that number only tells part of the story. China is the world's largest gold producer. Much of the gold mined domestically remains inside the country.
And they're a net importer on top of that.
Yeah. So, I mean, there is a lot of speculation that China could have somewhere between 5,500 metric tons, on the high end, 20,000 tons. What do you think? Do you think China significantly understates the amount of gold it has, and it's planning for a big reveal at some point?
There's no question. I think that they don't look to like what's going to happen next month. They're looking 50, 100 years down the line. I think they're doing everything they can to build up the credibility in their currency and their economy and their ability to be the next country to have dominance over the world, if you will. So part of that is trust in the currency and trust in what's backing that currency. I don't think there's any chance that they have just 2,000 metric tons. I think they have significantly more. I have no feel for how much more, but I know what they're working toward because we have a published figure of 8133. And I think that's what they're headed for or more.
They're working towards 8133.
Yeah, 8,133 metric tons. That's what we're
Oh,
holding.
to officially overtake the US. Well,
Yeah.
as I said, some people have that number as already potentially exceeding it. And, we do know that they have ambitions of taking a seat at the global reserve currency table that was made public, that President Xi has those ambitions, that they have been reinstating gold again as that neutral reserve asset while working with the digital yuan and trade with other countries.
Yep.
If China did announce that it has more gold than the US, what do you think happens to the dollar, to the gold market, if they do come out with this announcement at some point? What do you think the response is?
I don't think we just flip a switch and say, okay, China, here's the baton. I don't think that's what happens. I think they have a lot of other issues they need to work out before gold backing their currency and a sound currency is one aspect. There's a lot of other things that they have to do to play nice with the rest of the world and to be a leader for the rest of the world. And I think they have a lot of work ahead of them still. I don't think anybody is in the position to supplant the US in that role anytime soon, but it doesn't mean they're not working toward it. That's what I think we're seeing right now.
All right, let's bring it back to what we did hear from Bessent. And he was going through the archives there. He was explaining that the old certificates that he was showing Jesse there represented claims on physical gold and silver. And he appeared to suggest that if someone still had one of those old certificates, they could come and claim the underlying gold or silver. Let's watch.
We used to have silver certificates. We used to be backed by silver, sometimes gold. And then in the 70s, we just went to what was called fiat currency, where you didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is at Fort Knox, waiting for them to be claimed if so needed.
Now, Rich, according to my understanding, gold certificates ceased being redeemable in 1933 after Roosevelt suspended domestic gold redemption. Silver certificate redemption ended in 1968. Now, those notes today remain legal tender, but only at their face value, not for redemption into precious metals. What do you make of that? The Secretary of the Treasury effectively misstating monetary history?
Yeah, I might give him a little bit of a pass here. I think what he was trying to say is the gold is still there if you have a certificate. Again, driving home that the metal is there, but to say that it's waiting for your redemption, nobody can redeem anything. That is gone by the wayside. Like you said, in 33, it was illegal to own gold. So they're not going to give you gold if it was illegal for you to own it, no matter what you gave them in exchange. And in 71, President Nixon shut that window down. August 15th, 1971, he said, the window is closed for convertibility. Those certificates are nice little museum pieces, but they're not going to get you any gold. Certainly not at Fort Knox, West Point, Denver, or elsewhere.
Well, the certificates may have some numismatic value.
Absolutely.
Right? Some
Absolutely.
collectible value there, but no longer claims on the U.S. Treasury's gold reserves. Silver certificates do remain legal tender at face value, but cannot be redeemed for silver. But you look at those certificates, and it is remarkable to remember that U.S. currency was once literally redeemable for precious metals. How different that monetary system was from the one that we have today. I mean, talk us through that. Talk us how we got from that to fiat. Give us a quick historical background here, Rich.
It's very simple. We got to a point, largely because of the Vietnam War, and paying for that, and all the social programs back home. So the Guns and Butter, right, campaign, basically we were sending out more money than we were taking in. And basically, the people we were selling things to were coming to us and asking for gold in return. And it got to the point where I guess President Nixon and his Treasury Secretary realized that if this continued, we would have no gold because they were not being good stewards of the dollars that were supposedly standing in front of that gold. So they said, listen, we're going to close the window temporarily. I don't know if anybody remembers that from the speech that Nixon gave, but they were going to close that window temporarily in August 15th of 1971. And it's still temporarily hanging out there. It seems very permanent to me. And it's because politicians cannot balance a budget. They're after votes. They're not fiscally responsible. And that's why we're in the mess we're in right now with 40 trillion in debt.
And what is backing the dollar, the full faith and credit of the US government?
Well,
what does that mean, Rich?
Well, now you see the problem, right? You see why the world is pushing back on dollars and they're reaching out for gold because they have lost faith that this divided government that can't talk to each other and figure anything out, they can't figure out how to not overspend. They have lost faith that the full faith and credit of the US government actually means something, right? So they're not getting good value on their investment when they invest in treasuries, and the world is pulling back from the treasury window. They're still buying treasuries, but nowhere near at the level they did, which just means that we have to absorb more of that debt. And the only way we can deal with that internally is to increase our money supply further, which again adds to that debt over time.
Well, we'll get back to that, but I just want to finish what we heard from Bessent. And there was a curious comment there regarding Venezuela at the end. Jesse Waters says, we're getting more gold from Venezuela, I hear. And Secretary Bessent says, we're getting a lot from Venezuela, we're getting gold, and these oil sales are going great. It's going back to the Venezuelan people. What's the connection? Talk us through Venezuela, gold, and the United States.
Yeah, so I think this is a little bit different. So this is not to the victor go the spoils. This is not us going into Venezuela, snatching up gold and saying it's ours because we took out Maduro and now you're at our mercy. That's not what's going on here. Those are Venezuelan resources, and the gold market in Venezuela for years has been an absolute mess, run by bandits and gangs and whatnot. $2 billion worth of assets that's not benefiting the government whatsoever on an annual basis. So what we're trying to do there is restore a little bit of order to the resource market. That benefits Venezuela and their government because they get the benefit of selling those assets to the world, in this case, us. And then it also benefits us because they don't only have gold there. They have bauxite and coal and other tangible assets that would be of benefit to us. So if we can open up those markets, it doesn't just benefit Venezuela, it would benefit us as well. But this is trade. This is not confiscation.
Right. Yeah, the U.S. government recently struck a deal to bring some of that newly mined gold back into American markets. U.S. Interior Secretary Doug Burgum visited Caracas, and then a license was issued authorizing American firms to work with the Venezuelan state-owned miner Minervan, leading to the shipment of $100 million in gold to U.S. refineries. So I'm assuming on some level they're referring to that. Yes. Do we know where that gold actually goes after it gets to the U.S. refineries? Do we know what happens there?
I don't know. I'm sure somebody does. But again, this is trade. So this could end up very well in jewelry or in other applications. It may even make its way to a coin or two that are sold. But again, this is trade. This is not confiscation. Right. So I mean, those proceeds will go back to Venezuela with a small kicker.
It was interesting that gold was a top export of the United States a couple of months ago. So that was actually an interesting data point, perhaps linked to this. In terms of where the mine gold...
maybe they're getting rid of Gaddafi's gold without anybody knowing.
I don't know that they do that, but in terms of Venezuelans' actual gold, that remains frozen at the Bank of England, by the way, where it has been since 2018 due to legal and political disputes. And Venezuela's interim president formally wrote to King Charles to request the release of those reserves, stating that they are, in fact, urgently needed for reconstruction and humanitarian relief following the devastating earthquakes in June of this year. But so far, I don't think the Bank of England has released that gold.
I think they officially said no. But I don't know if that's the last word, and that's about 31 tons, about 4 billion if my calculator's still not broken. But that's a significant amount of money, and it could help the relief of the double earthquakes down there. And they need.
I'm sure it could, and that is indeed a very tragic turn of events. But the gold that the U.S. you're saying is assisting miners bring it back to the U.S., refine it, and I mean, I'm sure it advantages the U.S. to some level to have that Venezuelan gold brought to the U.S. I doubt it's purely, altruistic here.
Absolutely agree. But think about where that gold went before Maduro was taken out, before we were able to work with, Delcy Rodriguez. Prior to that, that was going to China. That was going to our enemies from our own sphere of influence. So that was not something that was comfortable for the U.S. I think this is a bit more of a comfortable situation. They can benefit, and we can too. And this is our part of the world, I guess, is what we're trying to say.
So, Rich, you've been watching the precious metals market for decades. When you compare today's environment to everything you've lived through, what feels different this time, if anything?
I think it's finally time. It's kind of like a pressure cooker that's had the lid on for a long time and is finally ready to blow. I think gold has finally hit the point where it's ready to blow. I think the debt that's already out there in the system, the increase in the money supply has already baked in a much higher price for gold. I don't think $5,500 is the end of this. I think if you just do a quick analysis of like the Dow to gold ratio, we got to get down to 5-to-1, which means the Dow's got to get down to 20,000, or gold's got to get up to about 9,000 an ounce. I think somewhere between 7,000 and 9,000 is probably where gold ends up in this run. We'll see how it plays out, but I think it's all baked in. This is not something that is going to develop over time, and there's going to be more of a demand and for gold. I think that demand is already baked in because of the debt that's already been pledged above ground in this world.
But
yeah, go ahead.
And yes, Rich, we have gold dipping below $4,000. So what's your read on that?
I think it was needed. We tripled the price in just a few years. Okay, that's a big move for any commodity, any asset. We needed a bit of a correction. We got a major one, 25%. But we've seen this before. We've seen anywhere from 29 to 30 some odd percent decreases in the value of gold after hitting a new all-time high. But then they turned around and continued the process up. If you look at the long-term graph of the gold price versus the dollar, there's no question. We were just down at a conference. One of the slides I put up was just the 6-month gold chart. And that fall off the cliff from the end of January to now seems massive when you look at the 6-month picture. When you look at the 100-year picture of gold, I mean, it's not even a blip on the radar screen. Gold is in a long-term bull market because the dollar has been mismanaged and therefore is in a long-term bear market. There's no two ways about it. Gold's going higher.
And you said $7,000 gold, $9,000 gold. How much higher?
I think that's next few years. I think we can get there. I don't think we're going to see that this year. Okay, by the end of this year, I think we probably get back to our all-time highs, and I think we build on that next year in a much more methodical approach than you saw over the past few years. But I still think it's a steady climb higher. We talked offline, and I've said on your program and elsewhere for many, many years, this is the biggest no-brainer in the history of no-brainers. Gold is going higher until politicians learn to balance a budget. Until they learn to balance budget, there's no question gold must go higher, because their only way to solve that is by increasing the money supply, which means more of those diluted dollars, which are worth less will then, command less gold. So that's going to happen. And a friend of mine shared a quote with me from Milton Friedman. I don't know if you could put it up or not. I'm not going to read the whole thing, but Milton Friedman said, keep your eye on one thing and one thing only: how much government is spending. All right, because you're going to feel that no matter what. If they can keep that under the income, right, then you have no worries about debt whatsoever. If they don't, and they haven't for many years, then you're going to see that in the form of a tax. It's either going to be an explicit tax, sales, income, what have you, or you're going to pay for it indirectly in the form of inflation or in the form of borrowing. But make no mistake, when the government overspends, you are taxed, and your best protection against that for many, many years has been gold. And I don't see that changing. I think the world sees it too.
And yet again, we have gold trading lower. What do you think the markets are missing right now? What's the biggest misconception that investors have about gold now? Is it linked to the Fed? Is it linked to dismissing increased spending that can come from this conflict in Iran? Either way, however that resolves, there's been increased military spending. What do you think is the biggest error that the market is making about gold right now?
Yeah, I think they're tying it way too closely to the Iran conflict and the impact of that on the Fed and what they might do with interest rates. Every single day, when there's talk of peace, right, gold goes up because everybody says, okay, gold's going, or there's peace, therefore oil will flow more freely, therefore there will be less inflation, therefore it will not force the Fed's hand to go ahead and raise interest rates. If there's war, everybody says, oh my gosh, there's war. Oil will be constrained. There will be higher inflation because oil affects every good and service that comes to market. And that's going to force the Fed's hand to raise interest rates. And raising interest rates in the big picture is typically bad for gold. Lowering interest rates is typically good for gold. But they're making that connection like, because somebody fired a missile today, the Fed is going to raise rates. And nothing, Michelle, could be further from the truth. We're sitting at 3.5% rate of inflation, right? 3.6 or whatever it was. We got 3.5% interest rates. There's a zero real return on your assets if you put them in a treasury or some sort of term deposit. In order for that scenario, that equation, to get more attractive for term deposits and less attractive for gold, to dissuade people from buying gold, you've got to get to high single digit, low double digit interest rates. And guess what? We cannot do that. We have 40 trillion in debt. Back in the 70s, 80s, Volcker could take interest rates to 20%, and that killed inflation and killed the gold's rally. Okay? We do not have that luxury because you can't finance $40 trillion worth of debt at 10% or higher. It cannot happen. We're not going there. Gold is your answer. There's no two ways about it. Biggest no-brainer.
Is there anything that, in your mind, derails your case for gold?
Find me a quorum of politicians who are fiscally responsible. And good luck with that, by the way.
That's the only thing that derails your case for gold?
That's the only
You're
thing.
tying it back to government spending?
Overspending, yes. As long as we're based in a fiat currency, overspending is the only thing that's keeping it's what's keeping gold alive. Balancing a budget and drawing down our debt is the only thing that would derail gold's, attractiveness. No two ways about it.
Would it though? Would it derail gold's attractiveness, or
Over
maybe
time.
moderate?
I think over time, if we can consistently underspend, pay down our debt, I think over time, gold will be less important to the individual investor. And I'll still have my allocation of 5 to 10% or whatever it is. For me, it's 10 that I hold as wealth insurance. That's not going to change for me, but for a lot of people, it will. When you lose faith in the dollar, you switch to gold. That's what the world's doing right now. When you have faith in the dollar, or whatever might be the reserve currency of the time, then you have no need for gold, typically is the way people think. So I do think it will come down. And we talked about this. I'm an eternal optimist. I hear people every day say $40 trillion. We cannot make that go away. It's too far gone. The hole is too big. We can never fill it up. I don't agree. I don't agree. I do not underestimate American ingenuity and the ability to survive and thrive. I think sometimes we lose our way and it has to get really bad before we start doing the things we all probably know we should do deep down. But I think we'll find our way, and I do think we can grow our way out of this, but a lot of things have to come together to do that.
But even on the optimistic, positive side of that argument, Rich,
Yeah.
purchasing power has still declined over 93%, I believe, if not more, since the creation of the Fed, right? Gold still remains an ultimate store of value, even if the US does regain its footing, even if inflation is moderated somehow, even if there is growth. Gold still is your ultimate store of value, as it has been for thousands of years.
Absolutely, but the world functions on dollars. We're not going to Starbucks and giving them a gold coin or a 1 gram bar or whatever the case. We're not doing that. We're paying in dollars. Dollars are what the economy needs to have faith in to grow. And I think once we have faith in dollars, the important thing is if we can grow our economy, we can bring down our debt. Now, ultimately, that would mean potentially decreasing the money supply, and that would be deflationary for gold. And honestly, Michelle, I don't think that's a bad thing.
All right, you're looking at it from the bigger picture, and I appreciate and I respect that. Let's circle back to how we began this interview as we wrap up here. What is the biggest takeaway that investors should have, though, from the fact that seemingly gold is working its way back into the conversation?
Yeah,
on a national level, on a political level, and on a geopolitical level.
Yeah, I've been telling people for years, be your own central bank. The central banks helped create this problem. They're not the ones who overspent, but they're the ones that had to inflate the money supply in order to go ahead and deal with the overspending, right? So they're very aware of what the problem is, and they know the solution, and they've been acting on it for 4 years. They've been buying gold, okay? We should follow that example, not the overspending and not the debt laden example. We should follow their example of how they're dealing with that right now, which is owning gold, increasing their assets in gold. And if you look, the banks are doing that regardless of price. For 4 years, they've been buying. We started this at about $1,500 to $1,800 an ounce. We got up to $5,500, and they did not really slow up. I think only 850 tons last year instead of 1,000 tons. I'm not saying you have to follow that example, but when you see a dip like we have right now, when you see a 25% drop back in gold's price with no sign of a fiscally responsible politician on the horizon, that tells me that gold is cheap, and silver, which falls further, is more volatile, is even cheaper. You should be backing up the truck right here, right now, and taking advantage of that.
All right, Rich, thank you. Always a pleasure chatting with you, Rich Checkan. Appreciate your time, appreciate your insights. You may need to work on your math, though.
I know, sorry, I'm off by 1 decimal place, but most of the math is okay.
Rich, always a pleasure. Thank you so much, Rich Checkan.
Thanks, Michelle.
And as always, thank you for watching. If you found this conversation insightful, interesting, educational, entertaining, hopefully all of the above, please be sure to like, share, and subscribe. It really helps us grow this community, and I really do appreciate it. And if you would like to learn more about building a precious metal strategy, you can reach out to info@milesfranklin.com. There's a team of specialized advisors and brokers that can guide you according to your personal circumstances. Also, check out the website, milesfranklin.com. As always, leave us your comments. We do love to hear from you. So as I like to say, feel free to praise, whine, or just opine. I'm Michelle Makori. For me and the rest of the team, thank you again for watching. Until next time, stay sovereign.
This is The Real Story with Michelle Makori.